All right, let's get the latest news from the world of business and finance. Here's Margie Smithurst.
Thank you, Bev, and good evening. In a much-anticipated move, China has approved the final parts of an ambitious Shenzhen-Hong Kong stock market link, which is now expected to go live by the end of the year. China's given the green light to connect Hong Kong and China's mainland markets, allowing foreign investors more exposure to tech-heavy Chinese stocks. The Chinese have also agreed to scrap an overall quota limit, which investors had considered restrictive. Hong Kong's exchange says it's an important step in opening China's capital markets.
I'm sure, Shenzhen Connect is an important component of MSCI now that it's actually happened. So that's, among many things, incrementally that, that will make the Asian market more and more accessible to international investors. And so we are clearly on the right track for it.
The link strengthens Beijing's case to get Chinese shares onto global indices such as MSCI. Investors had a mixed response to that go-ahead of the stock exchange link-up. In Chinese markets, Shenzhen gained on the long-awaited reform, but Shanghai was flat and Hong Kong dipped. Tokyo stocks made solid gains as the yen halted its rally, lifting exporters by making them more competitive overseas. In Europe and the US, stocks have generally retreated after the head of the Federal Reserve's New York branch suggested a rate hike was possible next month. The FTSE and DAX were down on early trade, and the three major US indices dropped off their record highs yesterday. China has accused Australia of protectionism over the Ausgrid decision and warned that Chinese businesses will turn away from investing here. The Ministry of Commerce was blunt about the Australian Treasurer's decision to block the bids of China's State Grid Corp and Hong Kong's Chung Kong Infrastructure for the sale of the New South Wales electricity provider.
This has been the second time of this year the Australian government has made decisions against Chinese enterprises' applications to invest in Australia. This decision clearly tends towards trade protectionism, which will severely hurt Chinese enterprises' enthusiasm in investing in Australia.
The Australian Treasurer cited security concerns for his decision. Three of Australia's big four banks are locked in a battle with tech giant Apple over access to its cardless transaction system. They want in, but Apple is only dealing with ANZ. And now, as Andrew Robertson reports, they are appealing to the ACCC for help.
The big banks are used to being the big guys in town, but Apple is bigger than all of them combined.
This is a battle for payments in Australia and how consumers will make payments in retail outlets and the revenue that it generates for the banks.
At stake is nearly $3 billion a year in fees the banks charge for processing credit and debit card transactions. Apple wants a piece of that action, but on its terms, and the banks don't like it. This is how Apple Pay works. You load your card details onto your iPhone, then when you want to make a purchase, you just tap your phone on the EFTPOS machine, it reads the card details, and away you go. Thank you. Currently, only ANZ and American Express are offering Apple Pay in Australia.
Negotiations between a company of their size and a global giant like Apple is so one-sided that a number of them need to come together in order to get some leverage.
In its submission to the ACCC, Apple didn't mince its words. These banks want to maintain complete control over their customers, adding that the banks want to blunt Apple's entry into the Australian market. Australia's banks are so used to getting their own way that their battle with Apple is being seen as a taste of their own medicine. At the first sign of serious competition, they're asking the regulator for help. As head of the ACCC, Rod Sims will have to make the call on whether the banks which operate an oligopoly can now also act as a cartel.
We don't let any of that extra stuff affect us. We'll be assessing this on the merits.
If Apple gave ground in Australia and gave them access to the radio chip or to the NFC chip in the device, then they would lose the ability to actually deny that to any other bank worldwide.
Many see this as the start of a big push by Apple into the banking sector, another industry the mega company wants to get its hands on. Andrew Robertson, ABC News.
Hong Kong's flagship carrier Cathay Pacific has announced an 82% drop in first half profit on the year earlier. The company says it's been hit by the economic slowdown in China, which has affected corporate and premium travel and has also faced intense competition. Net profit for the 6 months to June plummeted to $59 million from $320 million in the same period last year. And finally, online news and gossip site Gawker may emerge from bankruptcy relatively unscathed after US media company Univision won the auction to buy it for a reported $135 million. In June, Gawker filed for bankruptcy to avoid paying damages of $140 million. The site was sued by former wrestler Hulk Hogan after releasing part of a sex tape featuring the celebrity and his best mate's wife. The subsequent court case offered a startling behind-the-scenes look at the debate between newsworthiness and celebrity privacy. And I'm sure it was startling in many other ways as well. And that's business there.
And I'm not going to touch that one. Thanks, Margie. Well, Indonesia has begun marking Independence Day